Waiting for, I keep trying to use this new technology to stream, and it just got it to test and work, and can't get it to work when it counts. No, I'm not, Jerry. I'm not. I didn't get to see the numbers. I just saw what was happening. Anyway, let's get to the disclosure, and then we can talk about any stocks. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you. Patiently waiting, and then finally putting on a little bit of short here into this up market move. All right, I got to know what's going on here with this Facebook wreckage. Where are we here with this thing? Facebook down 17% after hours. I think I've seen Facebook perform worse on an earnings report in the past. Facebook missed on every metric is what I'm reading from Josh. Let me scroll up in the VTF here and look for the numbers. Where are the numbers? We had Qualcomm today too, right? Facebook monthly active users is a miss, 2.91 billion versus an estimate of 2.95 billion. Meta platforms, I hate calling it meta platform, like I refuse. Revenue looks like a small beat. EPS, big miss. Q1 guidance is weak. Q1 revenue guidance 27 to 29 billion with an estimate of 30.25 billion. That's a solid miss. They are encouraged by progress in Reels, commerce, and VR. Not encouraged enough. Yeah, that revenue number is no good. Daily active numbers missing is no good. Yeah, monthly active users down. Looks like it tried to support itself there in the low 260s a little bit. What's Qualcomm doing? Qualcomm down too. What's like Apple doing on this? Apple trading down a little bit. NASDAQ getting smizzoked. IWM not down very much. Unfortunately, that's where my hedge is. It was fortunate today because the IWM was super, super weak. It is tempting to start trading some Facebook here. I don't think I'm going to do it. I think I'm going to focus on doing the afternoon meeting. I'm tempted to nibble versus lows here. Or if you get an inside 5 and up here, to try that. I haven't been watching any of the tape because I was messing around with this technology that won't work. Big false print there, up to 323. Let's get this daily chart of Facebook. The next shoe drops for this market, just when we were getting saved by Microsoft, Apple, and Google, Facebook comes with the wrecking ball. It's just back into the range that it was in for all of 2020, 21 though, early 21. Looks like new lows are coming in. I'll never forget, I got caught trading Facebook after hours one day real bad. And it was worse than this. I don't remember how much it was down, but it was worse than this. I wonder if I could find it on the chart. It was years ago. Right now, Facebook is down 18%. It was definitely down more than that. And the stock was getting destroyed. And I came in not too big, with some size though. I came in and I got involved. That must have been this. That must have been this. What are the prices here? Facebook. Let me zoom in on this one. I'm just curious right now for myself. I got wrecked in this earnings report trading it after hours, and I thought I was so patient. Yeah. What's this move here? Closed at 217.50, and then the next day opened at 175. So that's way more on a percentage basis than this down move, right? What are we down? We're down $58 right now. We're down 18%. This move here was 25, 35, 40 bucks. Yeah, actually, it might be somewhat similar to this. But the earnings report came out, and it was trading in the 190s, I remember. I don't remember exactly, low 190s maybe. And it had stabilized there, and I found I took an after-hours trade based on some tape reading action I saw, and then the conference call was going on, and Zuckerberg said something. I don't remember what he said, but it was something guidance related. And whatever I wanted to use as my stop loss, and we know that stop losses don't work after hours, so you got to go manually. So usually what I'll do is if I'm long and I know what my stop price is, I'll take a limit order, I'll take an offer, and I'll cross it like dollars through where I want to hit out. So let's say I was long from 193 versus 190, something like that. So I probably had my limit order down to like 187.50 or something like that. And whatever Zuckerberg said, it dropped so hard, so fast that I hit my enter button and it was just gone. And I didn't get out. I couldn't get out. I was trapped. And I think I eventually just closed out at like 7:45 p.m. or whatever Eastern time that night for like a really bad loss, and then just then moved on. Gotta rebuild. Sometimes that happens to everybody, right? You get caught in something. Yeah, so they are taking Facebook to the woodshed here. Take one more look at this thing, and then we'll start doing this official meeting a little bit more. Oh man, look at that, 457 selling on the tape here. Refreshing seller. Ooh, they broke it and stepped back 10 cents. Step back 10 cents, just trapped everybody. Now that seller's stepping down to 60, step down to 40, step down to 256. If you could recognize the break of that seller, you could try to buy the break of the seller, but you got to be careful because he just broke. It looked like he broke before, and he just stepped back 10 cents. Now he's at 225.70. 225.70 broke. See if he's at 256. Here's 255.70. See if he's at 256. There was no buying occurring at 255 there. 255 on the offer started to sell. Oh my God. Oh my God, this is sick. Oh, now you got me tempted to trade it. 254 refreshing seller. Broke. Oh my God, he broke and then crossed right down to 253.70. Yeah, broke again, but I mean, every time this guy breaks, he just comes down even at a lower price. Somebody's in a bad spot on a lot of stock on Facebook here on this report. Holy cow. So somebody is just like, get me out. I mean, he's got to break at some point. 59 cents sold there, 252.59. 40 selling. Oh my God, this is insane. 252 selling, 52 sold. Let's see if the 40's there. Oh man, it's just next leg down. They don't even test sometimes the next spot where I'm looking to see if the seller is still there. That's how heavy the selling is. 252 seller still there. See if 252.40 is there. 252.40 broke. That would be where you buy. See if he was still there at the 252.40. That would be where you buy. See that pop now? I'm not seeing that seller coming in at all. Take that risk on that's not that bad. 254 sold now. He might be back. Could be a she. I just say he. But you see that pop when that seller wasn't actually there. But then, like I said, 254 came in. But it was still a nice little pop up to, $3 pop or whatever on the break of that 252 seller. We going for new lows? 252 selling again. 2,700 shares just went off on ARCA. Broke. Coming into an area here where there's a little bit more buying. But if it can't pop off this, it could be bad. But it's so crazy extended right now. 252.50 selling on ARCA. Selling on ARCA. Still selling on ARCA. Still selling on Arca. Oh, I'm so tempted to buy them. You don't want to buy the seller, though. You're better off buying the break of the seller. And they don't... Compliance really doesn't want me trading on the live stream. Oh my god, that tactic was insane. 250.11 low there. Relentless. They're trying to support the psychological 250 here a little bit. They're trying to hold this area. Look at that. They're printing it. Dude, they just broke that 250 like butter. There was 50,000 shares or whatever on the bid. There was nothing behind it. You would think at a big, round, psychological number like that there'd be more liquidity than what's being displayed. They took out that 50,000 shares and it was gone. 250 selling now. There could be a big pop if they break the seller at 250. Market gets a little crazy around these psychological numbers. No, he just stepped to 64 cents. Look at him. NASDAQ now selling. 249.64 NASDAQ selling. Sorry, I know I'm supposed to be doing the afternoon meeting, but this price action is crazy. Oh man, we're about to get the next leg of the bear market off this Facebook right here. Wow. 249.50 sold. 249.20 selling. Dude, this is relentless. It's like any price. We're just going to keep going down, and we're going to keep refreshing and selling and refreshing and selling. I would almost think there's a long trade coming in here somewhere, though. 248.12 a little bit. Oh my God. See, that's what... it seems like he's not there, and then he just crosses it like 50 cents lower. The selling is so aggressive. How much money did Mark Zuckerberg just lose? Down 22%. 248. This is insane. 246.45 seller. Okay, maybe. 247 sold. There we go. Yeah, looks seller's stepping back now, and he's weaker. Sold 247, stepped back the dollar to 248. 248 selling on Arca. Still refreshing, step back again. See, there. Like I just said, I think there's a long trade coming in, and kind of there it was. We're back up to this 250 kind of psychological numbers. $6 bounce right there. I'm assuming that Snap, Twitter, Pins, Roblox are all getting thrashed right now, but I'm not typing them up. Trying to form a hammer here off that tape info that we spoke about. Little liquidity at 250. I wouldn't be concerned about it. 249.90 selling. Yeah, I don't think I'm going to do anything with this Facebook. If I was going to take the trade, I would have taken it already a little bit lower when it broke there. I got no position. No position. Holy guacamole. My wife has been making fun of me because I'm not allowed to curse, obviously, on these live streams. And, of course, I would never curse as a professional trader because it's got to be the height of professionalism. So I say funny stuff like holy guacamole and what the heck now. But I'm starting to say it like in my actual personal life also. A big sell in there. Some big prints went off at 250, lifted $1, lifted $2. Diego, I'm sure. All right. Snap is down 20%, Twitter's down 8%, and Roblox is down 6%. It's ruthless. Twitter coming back a little bit. Snap not so much. Roblox, man, these guys are all just smoked. What are the Qs doing? Qs are still down. Qs are down a good bit, man. Qs are down like $6-7, right? $6.50. Amazon down 3.5%. Apple's the one holding in. Apple and Microsoft are holding in decently. I don't know how much weight Facebook is, Gabriel. It would be good to know. And Stefan, it sure sounds like you are right, sir. And that, I think, is the title of my YouTube video today. Or something like that. All right, let's try to do an actual meeting here. It's 4:30 already. This daily candle on the SPYs here is now totally distorted on what it actually was and to the close. It was an impressive day today, how well we actually held up. The game plan for today was that you can't buy, right? That's what we spoke about in the morning meeting today. The game plan today was, guys, you can't buy stock. Maybe, and I didn't even like, yesterday I didn't like buying stock, but I said if it was in play or relatively strong, fine. And honestly, today I didn't even like the idea of buying relative strength. I didn't even like the idea of buying, what? Yeah, I can change it to show pre-market trading. On the small time frames. Anyway, even yesterday I said you could buy relative strength and you could buy names in play. Today I didn't even like the idea of buying relatively strong stocks just because the XLE had such a big breakout day yesterday. We don't like buying day twos. So with just given where this market was, 3 big up days in a row, plus a gap up this morning in the SPYs and Qs, a little less so in the IWM. Can't buy stock today. You can't buy stock today. And whereas yesterday I wasn't in a rush to short and hedge, today I was like into this common gap up. I know it's being caused by Google and AMD. You know, Google and AMD reporting great earnings after the close. The Google 20-to-1 split is something I'm still pumped about. But into the common gap up on the 4th day up here, I'm like, all right, not only are we not buying stuff, but today's the day we got to look to short stuff. And first, I hit the SQQQQQQ. By hit it, I mean buy it, because it's a reverse ETF. And then I said to myself, you know, pretty shortly after that, I was like, why, you know, the NASDAQ has been so strong, and Google and AMD just report these incredible earnings. Is this the one that I really want to have? Or would I rather have weakness exposure like from the IWM? And I decided the weakness exposure was the way to go. So I traded out of the SQQQ and I bought TZA instead, which is the 3X small cap bear ETF. So it's like an inverse of the IWM, but weighted 3X. So that's what I got myself into, and I was glad to do it because the IWM was very relatively weak today. We can take a look at that. I think at the end of the day, the SPYs were up like a percentage point, and the IWM was down about a percentage point. So, you know, it turned out to be the right move, not fighting. Look at the intraday on the NASDAQ. NASDAQ was holding up much better, so it turned out to be the right move to, you know, get the IWM short instead of getting the Qs short. And at the same time, I've been focused on taking off long exposure primarily. Because of the degree of extension to the upside from this rally that we just had. And I was really impressed by how well the market held up today overall, honestly. We seemed to really struggle to break down. And at a certain point, you know, I had really good pricing on the TZA, so I'm sticking with that, and I was sticking with it. But at a certain point, I was almost throwing the towel in on trying to look for any intraday shorts because Qs were holding up like a champion. SPYs were grinding higher all afternoon. And, you know, the IWM was relatively weak and just kind of going sideways, but I figured I would just, you know, stick with the TZA that I had. So I think it was kind of perfect. You know, we were really patient. We didn't, you know, you easily could have been shorting, even 2 days ago, let alone yesterday when we got into 450 on the SPYs and been way too early and been in a little bit of trouble when SPYs are clipping 458. But by being patient, waiting for really more extreme extension, coming in and having that game plan worked out really well. And I'll tell you why the market held up so well. So relative weakness was relatively weak. These ARC growth stocks got crushed again today, even before this Facebook earnings report. This is where the relative weakness was. Growth names were gross. And it's all about FANG, energy, a little bit of financials, and as boring as it is, consumer staples. That's really where the strength has been. And these growth names just got, lower high, getting wrecked. Again, they were weak all day. DKNG making that pivot down. But, maybe, just maybe, these stocks, because, reversals are probably not going to be V-bottoms, it's actually a good thing. If you are bullish on DKNG, it has the opportunity right now to give you a bigger picture high or low and actually break out, which is what you need. I'm not predicting that. I'm not calling for it. I think for the most part, relative strength and relative weakness are really important layers of probability, and they need to be recognized, and that's part of the rotation that's going on right now with interest rates. XLE has been where it's at. It's not completely out of my brain that we can't see a more broad-based rally where energy type stocks are able to continue, and these things that are just absolutely demolished kind of create some sort of higher lows here and start basing or at least holding up better. But the key today was to not do very much, not add any longs, look for your shorts, look for your hedges, and just continue to recognize that where you don't want to do that so much, which has really been in energy. Apple, this Apple's holding up like a champion. Even right now, with Facebook getting destroyed. Man, look at that bounce back though on Facebook. That would have been a nice trade down there, a nice little $10. Even with Facebook getting destroyed, Apple's still holding up like an absolute champion. Microsoft is still holding up like an absolute champion. These are just the places where you kind of want your money to be. And then you have like XLP. Someone on the team brought up this XLP this morning, and I wasn't very excited about it. But I hope that you didn't not take it because I wasn't excited about it, because it worked out really well. I mentioned you could be long versus yesterday's low, or long on a break of like $76 for consumer staples, and that was really nice also. So money rotation continues. This is why our extension rules are so important, and it's also why it's really important to understand market dynamics, which is one of the other things I was trying to discuss in the morning meeting today, is the importance of understanding market dynamics, the importance of reading Pat's note every day to learn how markets work. Like this information here in Pat's note, just so important on understanding how liquidity works, understanding how volatility works, and what that means for a lot of these funds as far as putting more money into the equity market and taking money out, understanding why ranges increase by understanding the concept of how like negative gamma works, that's going to increase your ranges, positive gamma is going to tighten up your ranges. But when you're in an environment of negative gamma like we are right now, selling creates more selling, and buying creates more buying. When you're in a positive gamma environment, the opposite kind of happens. When buying comes in, it's going to naturally be met with more selling, and that leads to a tightening of the marketplace. Because if you understand that, then you can understand how and why these ranges get so big. And it's also why, like, even though I originally had a bounce back price target of 450 in the SPYs, I was saying, right away how easy it is for the market to overshoot that. And that's exactly what happened, right? Because of these market dynamics, and by having an understanding of them, the market's able to overshoot by $8. And now we'll see here. If this Facebook is not good, Qualcomm is not good, Qs are trading lower, Amazon's trading lower. We will see if we're getting another lower high in the marketplace after this huge snapback or not. But it definitely doesn't bode well for the marketplace as a whole. And we'll see. We'll take that as it comes. We'll take that as it comes tomorrow morning. I guess that's really all I have to talk about today. So I'm happy to take a look at questions that you guys got, and there's probably going to be a lot of chatter in here on Facebook stuff. But let me just try to scroll all the way up. Yeah, just a lot of chatter in here, so if I miss anybody's questions, definitely just let me know. Felipe saying, don't buy Facebook. No, Mark. Well, they can do a news halt after hours, but they don't do volatility halts after hours. Hope you crushed it there, Holman. Rich saying I should be a sports caster. The only thing is I don't really know too much about most sports. I could talk a lot about fighting sports, but I don't even know who's playing in the Super Bowl, which I believe is next Sunday. Sorry guys, just scrolling through here on the chat, trying to find pertinent stuff for the afternoon meeting, and there's obviously just a lot of chatter in here. Some cool memes that Felipe is posting, and some bears. I got bears in the woods over here. Yeah, pins, Roblox probably getting destroyed. Yeah, and it should be mentioned, you know, Sean here saying your rule about not holding a position into earnings has just been reinforced. And that's exactly right, guys. Holding a position into earnings is always 100% gambling. You're gambling. You don't know how the stock is. Even if you knew the numbers, you wouldn't know how the stock was going to react to the numbers. You just don't know. There's extreme circumstances right now that could ruin your account by holding stock into an earnings report. So, look, it's not that I don't ever do it, to be totally honest with you, but you really got to be having a huge profit cushion to hold stock in earnings. Did Ford report today also after hours? Was that right? I'm not sure. Looks like it's just down a little bit. But yeah, you know, holding into earnings is always 100% gambling. That was a great snapback in that 240 area there. And if you are going to do it, though, that's when I do like options. Because at least you know exactly how much money you're going to lose. Imagine just being leveraged long equity into Facebook coming into this earnings report. Are there no questions? Did I just scroll through this entire thing? Again, guys, a lot of chatter in the virtual trading floor chat here. So if I missed anybody who posted a question, I thought somebody posted a question about something related to ARCA in here, but I can't find it anymore. Question from DJ. Do you think the Qs are more telling, impactful on the overall market than the IWM, or is it pretty much even in the long run? They're just different, DJ. I think that the IWM actually gives you a better picture of the broader market, and that's why I really like to pay attention to it. I always felt forever that the S&P was the best view of the broader market. You know, 500 of the most major companies, but that's changed over time just because the market caps of the mega market cap companies have become so extreme. And I'm curious to know what percentage Facebook is of the S&P, which is Facebook's back now to 260. But over time, I think that the S&P hasn't even become as good of an understanding of the general stock that's out there. And I think that the IWM, being composed of 2,000 or so companies that are more mid-cap type companies, actually gives you a broader idea of how the average company is doing. And we know that the IWM has been relatively weak to the SPYs and the Qs, and that makes sense because you got Apple holding up the way it is, you got Qs holding up the way that it is. So we'll see how that impacts the market overall. I mean, we do see it, but yeah. Anyway, so I like the IWM, but the Qs are tech. It's like I don't. What is the Tech X ETF? X you got XLU, XLP, right? Utilities, staples. I don't ever look at the tech one, which is why I don't XLK. I don't ever look at XLK. I look at QQQ, because that's tech. That's kind of how I view it there, DJ. So I hope that helps. What does it mean on the level 2 when it says ARCA? That's the exchange. So Justin, check out my routing class if you have access to it. This is where I get into detail on understanding all this, but these are your exchanges. So, and the data that you have is the data that you pay for. I know most of you guys don't pay for depth on ARCA. I pay for depth on NASDAQ and ARCA. I no longer pay for depth for BATS, EDGX, and EDGA. So it means if you're not paying for depth, you can only see the inside bid and offer on that exchange. If you are paying for depth, you're paying a little bit more money. NASDAQ is bundled in, so you get NASDAQ no matter what. You're paying a little bit more money, but you can see depth. And I route to ARCA a lot, so that's why I want to pay for the depth for it. It's kind of worth it to me. And, you know, in certain circumstances, like what we just had there with Facebook, it can be important also to be able to read the depth. But Justin, check out my routing class. It's a 3-part class that I have in the training program or the boot camp for people who have access to it. And for anybody who has the boot camp, I got some extra classes added into that like a couple weeks ago. So check that out, like some bonus stuff in there that you guys should be able to see. Shane saying that the XLK is 23% Apple, 21% Microsoft. Yeah, that's insane. So what's the point of even looking at the XLK? Just look at Apple and Microsoft. Rich asking me why buy SQQQ versus shorting TQQQ, and that's a great question. It's a great question. I traditionally always would go short TQQQ as opposed to buying SQQQ. And I went to do that this morning and I typed it up and I forgot that the TQQQ split. And there's something about the split price here that just kind of turned me off on it. I really don't have any good reason, Rich. I really don't have any good reason for you on this one. And I had always thought that there was a time decay thing here. And I'd rather be on the side of time decay. So I thought that I could be short TQQQ and have time decay on my side as opposed to buying SQQQ and having time decay against me. Pat was telling me like a month or so ago that that's not accurate with these ETFs. I'm not 100% sure if Pat's right, but he was telling me that the way that they get reweighted every morning has something to do with them not having time decay or the same degree of time decay. So if they don't have time decay, that gets rid of my reasoning for shorting TQQQ, and then I might as well just trade any of them. But now Josh here is saying that there is time decay. So I don't know. If somebody wants to do some real research on this, I always thought that there was time decay in it, which is why I preferred to be short it. You get a little bit more bang for your buck. It's also why I never want to be long these garbage VIX products for more than like a day or two at the most, because they go down. I mean, you know, even this bear market that we had here just recently in the VXX, the bear market that we just had markets. Look at the VXX here in December where it was at highs, right? Got to above 25 bucks. Look at where VXX went to on this move. It couldn't even get to that high, but the market went well below it. Went well below the December lows. That's all time decay. I remember shorting VXX in the upper 20s here. Really, this should be even bigger, but it's not, and it's all because the time decay in VXX and UVIXI is atrocious. So I actually, if I'm looking for just a long market bet, I love shorting VXX because you get the time decay on your side. You just got to be really careful being short this thing, because if the market does have a real bear market, this thing can absolutely explode. And being short means that you can lose more than 100%, right? If you're long, at least the worst thing that can happen is you lose 100%. If you're short and this thing explodes like it did in 2020, you know, you could be losing hundreds of percents very, very quickly. I remember being involved with Pat on that one VIX ETF that they don't have anymore to the long side. during COVID, and we were able to absolutely crush that one, and then they got rid of it. So anyway, I don't know anymore on the. I don't have a definitive answer anymore because I've been told now different opposing pieces of information in regards to time decay on the leveraged NASDAQ ETFs there. From Robert here, in days like today where we really did not have much to do, would you say oil names after inventory's number would be a spot to look for some small intraday executions after positive news? Many names strong after their inventory number. Yeah, you know, news is always something you can pay attention to because it can make extension become more extended, right? And the XLE was strong post 1030 when that number came out. USO is strong. Natural gas had a huge day today. I still stand by the big picture technicals though. I still don't love buying day twos. You know, maybe if you're looking for a real day trade there, Robert, but I think you're doing more boredom trade at that point than anything. And, you know, boredom trading usually is not great for P&L. I did trade a little bit of Apache back and forth today and put a couple dollars in my pocket. But I was doing it with pretty small tier size there. Kind of, you know, bought low a couple times, sold high a couple times. I think that's what you're supposed to do in trading, buy low, sell high. For Marty, hey Derrick and T3, yes, interest rates going up equals my real estate biz getting busier. People want to lock in lower rates now. Cheers from Marty in Manhattan. Yeah, really good information there. It's going to be interesting to see. I feel like we saw this, Marty, also, it might have been pre-COVID. I don't even really remember now. There was a time there also recently where the market was getting worried about interest rates going higher, and I remember all of a sudden everyone was trying to buy homes right away to lock in those lower rates also, and then it never actually happened, the higher interest rates. So we'll see if it happens this time. It sure seems like it's going to because of the inflation situation. Yeah, we'll see if the real estate market's ever actually able to cool off. Instead of having it cool off, it seems like people are rushing in even more now for the exact reasons you said. Diego saying on S triple Q and T triple Q, a good point as well. Just go with what's more liquid. So let me take a look at the volumes traded here. S triple Q did 76 million shares today. It's very liquid. T triple Q did 99. They're both super liquid on those ETFs. Then Josh saying the real question is why not just play the QQQ? I like having more tier size. Was the reason for that, and actually, the order that my brain went in this morning when I decided I wanted to, you know, first short the Qs was first I typed up T triple Q. I'm like, oh, it's split. That's interesting. And I was like, maybe I should just short the actual Qs. And I typed up the Qs. I'm like, yeah, but it's like $400. Like it's just gonna, you know, utilize up a lot more buying power. I'd rather be in something that's a little bit cheaper, and then and also leveraged. Right, and also get the 3x movements on it, just get more volatility from it. And then finally I went to the S triple Q as kind of my third choice. I was like, you know what, let me just look at this here a little bit and see what that looks like. And that's kind of how my whole thought process went this morning on trying to figure out if I want to be short Qs, do I just short Qs, short T triple Q, or buy S triple Q. But I definitely wanted the 3x leverage on what I was getting involved in. TVIX, yeah, that was the one. Yeah, we were long TVIX. That was insane. If you were short that, even with its time decay, and TVIX had time decay too, but if you were short that thing in 2020, I'm probably not talking to you. ET, sorry, man. It's a really difficult situation on what to do when a stock is trading below your out after hours. I can tell you what I usually do. I have what I call a 15-minute rule, which means that I wait for the next day, and off the open, if a stock gaps past my out, I wait for 15 minutes. And whatever the low is at 9:45 Eastern, even if it's trading right at that low at that point, that becomes my new stop. And it sucks when that situation happens. It's happened to me a couple of times in my career also, where I'm swing trading something and it gaps past my out and you're put in a really tough situation. and that's why you always try to give yourself the profit cushion, right? So that you're not in that situation. But Twitter's down 12% after hours here, so it's just a really tough situation, man. So you could hit out here onto this rebound a little bit if you wanted to. Personally, if it was my trade, I would wait to assess at 9:45 tomorrow and just put my stop in at whatever the low is at that time at 9:45. From Nick, the VIX is always in contango, as volatility is always expected to be higher in the future. So you buy a front month and roll up the higher month and roll up a higher next month contract, and that is the content bleed. Yeah, that's what creates the time decay in the VIX. And it's why I like being short the product. I'd rather be short VXX most of the time than be long like SPYs. Because if the market goes sideways, I'll still get paid. Sorry, just getting through the Felipe Josh chatter. Spotify, did Spot report too? If it did, I missed that one. Holy cow. Yeah, UGAZ is gone, which I loved trading UGAZ, that stinks. So the 3 times leveraged nat gas ETF, that thing would be going bonkers on some of these days. And that was subject to time decay too. That thing would be going completely bonkers on some of these days with these natural gas movements. It was definitely a fun trading vehicle. Josh saying that TVIX went from 20 to 1,000 in a month in COVID. I did not catch that full move, unfortunately, but I caught a nice chunk. Okay, cool. Alright, gang. Looks like we covered it. You know, there wasn't really too much to talk about, honestly, from today. We had a game plan that was a less is more type game plan. We wanted to hedge ourselves. We wanted to take longs off into this degree of extension, and then we got a little bit distracted by the Facebook fun. So we'll see how that plays out tomorrow. We're almost definitely going to be gapping down tomorrow because of some of these earnings reports. So we will assess it at that time. And Robert's sneaking in another question. What did you mention in my question? Taking intraday trades as boredom trades? Yeah. That's what I'm saying. Like, it almost seems like you're pushing it too much. Like, you got nothing to trade, and you're like, all right, USO had some news here that's affecting it a little bit, and then you are like just trying to do stuff because you got nothing else to do. I think you're better off sitting on your hands and paying attention to the big picture, and the big picture in the energy stocks are still telling you just not to be involved today. Alright, gang, that's it for today. We'll assess tomorrow morning's gap down tomorrow. Have a good night, everybody.